can't! Hold on! What the fuck is going on out here?
The stock market is like big waves, right? Up and down. But this week specifically, it's quite a storm. I feel that if you look at the price movement, right? Suddenly just looking at QQQ from 630, suddenly just down to about 600, right? And I recall during Friday openings, it was like down quite a fair bit, right? Then of course, Friday closing recover a bit, but still this week is quite a volatile week. So this is QQQ movement. The way I describe the movement is like this, right? So just a few weeks ago, we are like, ooh, happy market all-time high. Then after that, then we are in the storm already. Suddenly everything going down, right? Like AI going down, bubble crash, AI bubble pop, all those things. So you can see, right? The market swings up and down within short period of time, right? So like even I monitor markets so frequently, I'm still, surprised by the reaction, right? Like things can change so fast within short period of time. So let's look at the market first. So S&P 500 was down close to 1%. I think QQQ down a lot more, right? So it was down negative 1.6%. But if you look within QQQ, I think quite a number of stocks dropped quite a fair bit within this week. Say for example, Amazon down by 5.5%, Shopify down by 6.9%, Tesla down by 8%, Intel down by 8.7%, Exxon continue to down, right, about 9%. Then if you look at strategy, MicroStrategy, right, down 20%. So I recall even Bitcoin price didn't down so much, right? But for MicroStrategy, I think down quite a fair bit, 20% just in 1 week. If you zoom out, right, MicroStrategy actually down by close to 50%, right? So that was quite a big drop, right? So that's MicroStrategy. So if you look at the price versus Bitcoin, right, this is over the past 1 year, right? Because I recall the first time I was talking about like, oh, I'm very bearish about this stock because the NAV premium is so high. Those video, right, when we had the discussion within the Bearholder Pod, and then I also created a couple of videos, those are really around November and December last year. So it was really 1 year ago, right? So you look at the price of strategy versus Bitcoin, right? It was like tracking along quite well until around July this year. Then suddenly MicroStrategy just, continued to drop, and Bitcoin was down a little bit from July till now, but not as much as MicroStrategy. So that was quite interesting move, because if you look at the price movement, right, from just 1 year ago, Bitcoin was up by 9.7%, then strategy was down by 41%. One is up, another is down. The difference is like 50%, right? The reason is because of this. So this chart is showing the NAV premium, right? So NAV premium, just to keep it simple, right, this is just the market cap, meaning the share price multiplied by the outstanding shares for MicroStrategy. So this is the worth of the company, right, versus the NAV, meaning that versus the Bitcoin holdings that they have, right? These two together, if you take a ratio, it means that how overpriced is the MicroStrategy stocks. Because let's say if you think that MicroStrategy is like close to 100% Bitcoin holdings, right, just the value of the Bitcoin versus their market cap should be close to 1, right? So that one means that the NAV premium is 1x, right? But I think last year when I was very critical about the stocks, I think it was 2.5 or even 3 times of the NAV, right? So because of the high NAV premium, I was very critical and asked people, don't invest in this stock. If you want to own Bitcoin, just own Bitcoin. Don't do crazy things and think that, oh, just because MicroStrategy went up more than Bitcoin before that, then it can continue to rally like this, right? So I think the gravity is that it will pull it down to the Bitcoin holdings that they have, right? Because their other business is very tiny, right? Very like not important. So this is the reason NAV collapsed. So the share price collapsed, right? So this is like, I would say it's quite predictable. And I openly mentioned this to people. These are a couple of sample tweets that I mentioned in X, right? So I say that I even call it Ponzi scheme, just to tell people don't invest in this company, right? Then and try to tell people that, okay, when MicroStrategy talk about Bitcoin yield, that is actually issuing shares at a premium, and as long as the narrative is still on, some people will still buy the stocks, right? But still the gravity is pulling it down, right? Because there's no good reason to believe that the NAV premium can continue to go up, right? So it all gravitate back down to zero. From now, it is potential that it may go down below 1x, right? So market cap can be lower than the Bitcoin holdings. But once that happens, right, then I think the tendency is that it will outperform Bitcoin, right? It will be keep pulling it down to the NAV of 1. That's my expectations. Of course, from time to time, sometimes all these things, right, they can divert from the gravity for a while. Eventually, they will come back. So you can take a pause to read some of the tweets that I mentioned discussion, right? And I was very critical. This was 1 year ago. So now because the NAV premium, right, is already close to 1 times, right? I'm actually less critical and less bearish about these companies. To me, it is close to neutral to owning Bitcoin just because of the NAV is a lot more reasonable now. But if you ask me whether I will buy MicroStrategy or not, my answer is no, because if I want to have exposure to Bitcoin, I will just buy Bitcoin, right? A lot simpler. So I don't want to complicate my investment strategy by having all this exposure. So this is just me after 1 year come back and revisit and tell people that, see, I was right. At the same time, I just want to close this down, right? To say that now because NAV premium close to 1, I'm no longer that critical on these companies. So that's my stand today. And then don't know why Michael Saylor came out with this picture, right? So what happened? So MicroStrategy was burning, then he's just like, running away. Is that the message? So I was also quite puzzled by this post. But he said HODL hold. So, but he seems like running away. I don't know what's going on here. Okay, that's on MicroStrategy. Next, I just want to quickly talk about a couple of posts and development on Michael Burry, because I think this week there's a couple of posts, right? The first one, Michael Burry, he was shutting down his hedge fund. So he just said that I'm going to liquidating my fund, closing it down, return the capital to shareholders. So the main reason is because I think he failed to outperform in the past. So in the recent, months or years, right? He did mention that my estimation of value in securities is not now and has not been for some time in sync with the market. In other words, he's wrong. So he's losing money, he's wrong. And then now he just, with apologies, right? He wanted to return money to the investors and then just closing down the funds. So that's the development. Then there's a couple of things, right? So he also tweet, right? The bet against Palantir and Nvidia, right? The news agency was reporting that the notional amount of is close to 1 billion. It's actually 912 millions, right? So those are big numbers. So he just want to clarify that no, he bought a put options on these companies, and then the notional could be 912 millions. It could be true, but how much he spent on it, right? The insurance, right, is only 9.2 millions. So that's the amount that he spent on it. And then he also posted the screenshot from the movie, The Big Shots, right? Me then, me now, oh well, it worked out, it will work out. So he's trying to say that he still think that he will be correct in this. Palantir and Nvidia will crash. He will be right one day, but today still not proven yet. So basically that's the message. So he's closing down his fund. I think from now on, whatever he does with the funds, right, we don't know, right? Because he's no longer publishing his 13F filings. So we don't know. So that's the update from Michael Burry. And then also he mentioned a few things, right? I think this is a lot more relevant to Nvidia shareholders, right? So he said that, the depreciations, all these companies, instead of like depreciating their assets in 3 years, now they're extending it to 6 years. So just to keep it simple, right? This is actually just accounting concept. So when companies, they bought all this hardware, right? Let's say they spend 1 billion on the servers, right? You cannot say that, just because you spend 1 billion today, then your today's profit will be minus out these 1 billions, right? So accounting goes by accrual, and they don't, just because you spend today, you have to take it off from your profit today, right? So that's not how accounting works, right? So they will say that, because you spend it 1 billion and all this hardware can last you, say for example, whether it's 3 years, 5 years, right? So you have to take that 1 billion divided by how many number of years. I mean, it could be straight line, it could be some other pattern of depreciations, right? So those are accounting concepts. But to keep it simple is that if you depreciate over, let's say 3 years, then that 1 billion, right? It could be like, 333 million being depreciated this year. So it will be minus out from your profit this year, right? Then next year you will still minus out, because all this hardware, they can last for a number of years, right? So you just want your P&L to capture the usage or the life of these hardwares instead of like the timing of your payment, right? So that's the accounting concept. So by extending the lives, right, let's say from 5 years or to 6 years, right, you are actually reducing the depreciations on the upcoming years, and then your P&L it will shown as like it is better. But so all these things, right, is fine as long as really when they depreciate against along these 6 years, right, then as long as the hardware can last 6 years, then there's no problem, right? Because this is they are being useful for 6 years, and then you're just depreciating it for 6 years. The problem is that let's say within 3 years all these hardware's broken down, and then you are still depreciating, then you have to depreciate it at once, right? Once it is broken down, right? So then that will hit their P&L on that third year, right? Then that could be a reason. But other than that, I look at all these companies, they say they are going to depreciate against along these 6 years. I think this is all like it will be challenged by the auditors, and then I believe that they have justifications and also data to back it up, right? And think that 6 years makes sense, right? So I'm not particularly concerned on this now. It's just that we need to be aware that when they change all this, in the past it was 3 years, right? Now becomes 6 years, right? So that means there will be more depreciations in the future, right? Then that will hit their earnings in the future, right? So this is just how the earnings is being reported now. So if you are very concerned on all these things, then maybe you just focus on free cash flow, because if you look look at free cash flow, right, whatever they spend today, they are being minus out from the free cash flow, right, when they compute that. So as long as free cash flow looks good, that means like they already kind of like fully depreciate it, right? So one way to look at it. So that's like just to tell you that all these things, right, there are some implications, but to me there's nothing concerning here. And all these things, when they make all these changes, right, actually it was already discussed, released during the earnings call. It's just that now Michael Burry just highlight this, right, suddenly become a news, and then people are talking about it. So I was find it quite funny, like how come these things came out now? Because all these things, I think it was a while already, like maybe 1 or 2 years back. So that's on the depreciation. And just to conclude is that I'm not worried on all these things. To me, the thing to look at is that, yeah, these are the money that they spend, whether it's 1 billion, 10 billion, 20 billions, right? These are the money they spend. We just want to make sure that all these things translate into value. And when it comes to value, there are many forms, right? One value is that they can make their product a lot more better. Say, for example, let's say Meta using all their hardwares to make their algorithm better, right? And then from there, they can generate more revenue. Those are values that's being generated, right? Then other companies, let's say like all these OpenAI, whether it's XAI, right? So they use all this hardware to train a better models, and that better models will, it is a form of like marketing also, right? Like attract more users and have that flywheel going, right? To me, that is also one form of value as well, right? So that's why I think there's genuine value being created here. Whether that values, right? Like how do you assign a number to it and then divided by the capex you want to calculate the ROI? To me, that one is very, very hard to calculate. We don't have the full informations, and some of this value is kind of like qualitative, right? You don't know the exact value, right? Talking about, let's say like marketing, how do you value it? So it's not that easy, and most of this information is not published anyway. So for me, it's like I trust the teams, let's say all these AI companies, I trust them that they are spending all this money because they are seeing the value. And sometimes the value is just like, oh, we need to spend to stay in the game, because if not, right, I will be totally out, right? Totally lag behind, right? So that one is also like you need to contrast the pro and con, right, of all this spending. So to me, I'm still supportive of them keep spending. One thing good is that I invest in Nvidia, right? So all this spending to Nvidia, I also recapture back from Nvidia's side, right? So that one is definitely one way to look at it. So but all in all, I think that this is not a big thing. Valuations, whether now valuation is high or not, that is separate issues, right? But just focusing on all this depreciation discussion, I'm not that concerned. That one is on Michael Burry. Then let's talk about some good news, right? Because I think Warren Buffett, he just published that the 13th filing, right? Then the new thing is that they review a new positions in Alphabet. I actually don't recall if they have invested in Google in the past. I don't think so. I think this is the first time they invested in Google. You can see, right? Immediately I checked, like, is it like just a very small, tiny positions, or is it like a sizable one? Actually, it is quite sizable, because if you look at Google here, right, this is 1.62% of their portfolio. Those, let's say like 0.08%, these are very small. You can ignore them. So I think this past quarter in Q3, the big movement was that they continue to pare down Apple. This was 4%, and then Google 1.6% added up, right? So if you look at their holdings, right, Google, I think is number 9, right, in the rankings. So suddenly you initiate a position, it's like top 10 already. I think this is quite sizable. So that's Google investment. I was joking, right? I was saying that Buffett didn't read newspaper and wasn't aware that there's an AI bubble right now. So people are talking about AI, right? Bubble. Usually, which companies are AI companies? I mean, number 1 is Nvidia, right? Google will be number 2, I believe. Let's say Microsoft, Meta, all this is like, top 5. Broadcom, AMD, Palantir, you can include all these companies into the AI companies list, right? Then suddenly Buffett, who almost never invests in AI or tech companies, right? I think he has Apple, but Apple also is not big in AI, right? So suddenly he just invested in Google. To me, it's like quite funny, like, even the guy that don't really pay attention to the tech world suddenly just invest in Google, right? So I think that is a good sign, at least for us, right? Kind of like validated our thesis, right? We are saying that, okay, all these companies like Google, actually they are making use of their AI capabilities, make their product better, make their advertising better. So all this actually translate to revenue, translate to free cash flow. So it is a legit business, right? It's not just all pure narrative like back in dot-com bubble era, right? So then now, I think with the backings of Berkshire, I hope that they don't, it's like the TSMC investment, right? Like they fast in, fast out within 1 quarter. I hope that Google positions will stay for much longer under the new Berkshire management. But let's see. This is just the first time, right? Who knows? Next quarter suddenly missing out. Don't be so happy about it. So that's my joke. And then lastly, just want to cover this, right? Because Buffett just released a letter to the shareholder. He said that I'm going quiet. And then basically, I think he's like truly passing this management, this CEO role to Greg Abel, right? So Greg will be the new CEO. He will be the one that write the CEO letter. He'll be the one that sit on the stage and answer shareholder shareholders' questions. So I think Buffett, maybe he will still attend, but I don't think he will play a key role. He's still the chairman, but I think he's like getting some distance himself from day to day already, which is good, right? Because I think this is succession planning on Berkshire's side, right? I think that's definitely good. And then inside his letter, I think he's giving us his few final thoughts, right? I think all this is really good read. So I'll put a link at this video description if you are interested to read out, right? I think this is definitely good letters. I think in the future he will continue to write, but it won't be as long as the previous one. So it's probably like all this short write out, but still connect with his readers. So I think the interesting paragraph is this, right? Greatness does not come about through accumulating great amounts of money, great amounts of publicity, or great powers in government. When you help someone in any of thousands of ways, you help the world. Kindness is costless but also priceless. Whether you are religious or not, it's hard to beat the golden rule as a guide to behavior. So I think this is definitely a good paragraph, because what we are doing here, I'm doing here, even community members who are openly sharing in the group, right? I think it's all like trying to help the communities in the sense of like improve each other when it comes to investing, because I do see that there are many young people who struggle when it comes to investing. So they don't, some of them, like the younger crowds, right? They don't even know how to differentiate between trading and investing. They thought that they are trading in and out, that is investing, right? And they don't learn the investing like the Buffett's way, right? Which is like treat the stocks that they own as a business and then just holding on to all this business. Preferred holding period is forever. I think this kind of good teaching when it comes to investment is a good one. And that's what I'm doing here, right? Just trying to help out. I know that this kind of like investing style is not for everyone. Some people, they can't. They just look at the price up, they need to sell, lock in the gain and call it like, oh, I made a gain, right? Some people, they are, emotionally, psychologically just inclined to do that kind of things. To me, it's like, it's fine. Those are just trading, right? We are not doing trading here. We are doing investment. We invest in businesses. We talk about the businesses. That's how we build our portfolio and build our wealth over time, right? So it's all not about like how much money that we are accumulating. It's more like just to help people in this journey and then hope that we all learn from each other throughout this journey. So that's the closing of my presentation. Thank you so much.